Welcome, and welcome to this session on geopolitics and governance. I'm Martin Sandbu from the Financial Times. I'm delighted to be your moderator for what's going to be a very exciting discussion with some wonderful guests. My panelists, I'll introduce them very briefly, are Doina Nistor, Deputy Prime Minister of Moldova and also Minister for Economic Development, Simon Mordew, Deputy Secretary General of the EU's External Action Service, and Mark from the EBRD. And Mark Bowman, you are, I guess, our host in a sense, so thank you for having us, since this is your house.
Thank you.
We're going to have a very exciting discussion, I think, with these expert voices, but I want this to be a conversation with all of you as well. So we do have Slido set up. You should be getting the code and the QR code on the screen here, and I will be getting an iPad at some point. So also those watching online, please send in your questions in the room or online. Feel free to send questions as we speak, and I will maybe throw some of them into the discussion. But in any case, we'll take some time at the end, both to take questions live in the audience and from online. So do please put down your questions, either prepare them to speak into a mic at the end, or put them on Slido, because we want this to be as interactive as possible. The title of this panel is Geopolitics and Governance, the Role of IFIs in a Changing World. I've asked all the panelists to give short introductory remarks on what they think are the important aspects of that change and what that means for the role of the international financial institutions. I just want to set the scene a little bit myself first. Because the IFIs, all the multilateral institutions, were of course set up in a world and for a world that was premised on a particular world order. The multilateral, liberal, open market trading order that we've all been talking so much about recently, and that we all know is under pressure from geopolitics and domestic politics across the world. One way of thinking about that change, I think we'll get an illustration up on screen, is just in terms of trade integration. You will see this line charting the share of goods trade in the world to global GDP was going up and up and up and up in those 2 decades after the Berlin Wall came down, and now seems to be stagnating. I mean, this is just one of many illustrations of how there's a big question mark over economic integration. There's a big question mark over the sort of institutional environment that has accompanied that economic integration. And of course, a big question mark over whether national governments, what attitude they take to the world order we knew and what they see as either the right steps to maintain it, defend it, strengthen it, or put something else in its place. So lots of question marks, and hopefully we'll get some clarity in the discussion today. The last point I want to make is that the EBRD, perhaps in particular, is in this challenging place because more than any of the IFIs, I think, it was really made to fit into that world order. Its main task has been to bring the countries from the former communist bloc into that liberal world order. It's done a very good job of that. We have many successes racked up, but it does mean even more perhaps than for many other institutions, we need to think now how the EBRD and other institutions navigate those changes. That's all I wanted to say by way of my introductory remarks. I'd like each of you now to give some of your initial remarks on this big question: what are the important changes, and or how do the IFIs, what is their role in those changes? We'll have a short discussion about that, then move on, think a bit about the role of governance inside countries, and finally get to your questions as soon as we can. Doina, I would like to ask you to start, so please let's hear your initial reflections on this topic.
Thank you, Martin, and it's a privilege to join such an audience today. And I heard Moldova being shouted out at the earlier meeting this morning, so that's both a challenge and an opportunity for the country. I mean, in geopolitics, governance, and how the IFIs can support smaller countries in frontier markets like Moldova, especially with everything that's changing around us in the world and how it's affecting such a small and open economy like Moldova. And of course, I mean, Moldova today is navigating overlapping crises. We have security, energy, trade disruption. While at the same time we're accelerating our path to EU membership. And for us, governance is not a theoretical goal. It's our frontline defense and the main engine of reform and resilience for our country. I mean, in just 4 years, Moldova has weathered the pandemic, the impact of the Russia war in Ukraine, severe energy crisis and logistics shocks, and this all for such a small country of only over 2 million people as a population. And yet, I must say that Moldova has emerged more aligned, more determined, and more connected to Europe, both economically and institutionally. Our transformation is anchored in the 1.9 billion, the EU growth plan for Moldova. I had the privilege to work with my team at the ministry and with this government to negotiate it, and we've been doing so in several months what other countries have been doing in several years, so it's an accelerated path. And we signed it last week, and it's a big, big milestone. It's a historic step for our country, for Moldova. And it's more than funding. Of course, 1.9 billion is the largest historical funding package that the country has received. But it's a strategic pact for deep reform, economic convergence, and infrastructure modernization. And I must say that with strong governance, and governance here is the key, we plan to double our economy in the next decade. And this comes from jumping front of a very low economic growth and zero, basically, economic growth in 2024. So it's an ambitious goal that we need to fulfill. But as I said, the challenges are also opportunities. I want to highlight 4 areas, basically, where Moldova is turning geopolitical pressure into development momentum, and where IFIs like EBRD, our esteemed and very valuable partners, are critical partners in our journey. First, it's resilience through reform. We have heard unlocking private investment as the key. Also this morning, and moving forward, this will be even more essential. And in Moldova, private investment has increased by 15% in 2024 after 2 difficult years of decline. And private investment, I mean by the local companies, and that doesn't include FDI, that's still on a negative trend. And that was the result of a deliberate policy of our government. It's a 0% tax on reinvested profit and state-backed loan guarantees and smart state aid that is targeting some high-potential industries, more traditional ones, and sort of re-engineering the industries, let's say in food processing or pharma or the automotive sectors. One of our other key potentials is the diaspora. And for many countries, that's where some of the economic power and sort of the rebuilding power lies, and also the economic and democratic ties. And for Moldova, we are supporting the diaspora to return and contribute to the country. And not just sentimentally, of course, we want them to continue to be connected, but also economically, through digitized services and business incentives. We aim to be a 100% digital country. We have an objective as under the reform agenda to have 75% of the government services digitized, and that's sort of a prerogative. It's a fair play. It's a must. It ensures a level playing field within the interaction between the government and the citizen, the government and the businesses. Second, I would say connectivity through infrastructure. The war in Ukraine has redrawn the trade maps, and Moldova, once peripheral, is now a key corridor between Ukraine and the EU. And that's why I want to give a shout out to EBRD's investment in rehabilitating, for example, Moldova's north-south railway corridor. And it's not just about transportation, it's about the solidarity lanes. And that's a key for food security, and it's about Europe's resilience. Of course, These projects take years to complete, but they're very important. They're changing the game for such small countries and for the region, for such small countries like Moldova and for the region. And another example is that together with the EU and EIB, we're restoring 450 kilometers of railway lines to ensure uninterrupted cargo flows, and that's especially important for the flow of goods from Ukraine, like the Ukrainian grain, like 2 years ago at the onset of the Ukrainian war. And these projects, again, take times and years, but at the same time, they unlock opportunities, and they also attract private investment, like in logistics, for example. And they also make Moldova a reliable link in the regional value chain, and that's, again, important for a country small like Moldova to be plugged and connected to the regional value chains. Third, I want to mention innovation-led growth. This is very important as, again, looking at Moldova's GDP, and if we continue the economic approach, this current trajectory, I was joking, that it won't even catch the GDP of Albania, soon in a couple of years. So we need to be more innovation-based. We need to build an innovation-based economy. And I want to just give an example about the tech sector and the role it can have in such a small country like Moldova. It used to be 0% of GDP. We couldn't even find it 15 years ago. Where is the tech sector? It was like, 20 million euro worth of exports. Today is 7% of the Moldovan GDP. Just 15 years later, and it drives 11% of the Moldovan exports. And the government was very curated about it. We have instituted a so-called virtual Moldova IT park with a 7% single tax, a flat tax that was recognized among the best government-driven incentives for the tech sector in the region. And what we have done is very smart because last year we extended it for another 10 years until 2035. And that is sort of giving predictability to the investors, and that's ensuring a growth for the next 10 years in a situation when we also have the digital revolution with the AI, and the countries like Moldova need to prepare and make sure that we can participate in that. And of course, that's unlocking new economic sectors where we want to focus, like digital media, like medical services, and R&D, for example, in nanotechnology, where Moldova has Soviet-era technology that we inherited, and we're renovating it or restoring it. And for example, we are among the few countries in the world that have nanotechnology in vitro fertilization, for example, that is used, or for brain surgery. Like, I'm not sure if people know us for the wines, but like we have industries like that. And from the perspective of the Ministry of Economy and our partners, we need new economic sectors to diversify the economy. And we need to put more into science and R&D in the long term, including in frontier markets like Moldova. And number 4 is, of course, energy independence and security. Moldova no longer depends on Russian gas. We have diversified through Romania and the EU. We have increased our renewables 8-fold. And for example, in 2024, already 16% of our electricity came from green sources. And we're building the high voltage line, which is called Vulcanești-Chișinău, and our first independent electricity connection to Romania and the EU, which means that we will be part of the EU electricity market. And 2 more integrated EU lines will follow. And these are not just infrastructure investments, they are sovereignty and economic safeguards. And with that, what I want to conclude is that the EBRD and the international financial institutions, we together, we are designing the Moldova's green future because we are co-investing together in this very strategic energy investments. And that, follows from there. We'll have smart grids and then energy efficiency programs coming soon more. And finally, governance for delivery. My last point is that we are aware that sound governance is the most powerful guarantor for market trust. And yet, we still need homework to do. We need to reform the state-owned enterprises. That's a big task, and put them into productive use. For that, we need to increase transparency and internal controls, and we are partnering with EBRD together on that. And here, EBRD and IFIs are not just the finance. It's more than funding. It's about being an institutional coach, for countries, for emerging frontier economies like Moldova.
Yes.
And
wrap up.
yes, thank you. For the last, I think, for the future, where we want to see more with IFIs is more deeper engagement in institutional capacity building, like infrastructure projects. And last but not least, to co-design the green and digital financing tools and sort of the green and digital economy, where frontier markets like Moldova can be part of.
Thank you so much. I think we heard quite a wholehearted embrace of this multilateral open trading order, but with a harsh intrusion of geopolitics and the point about energy, of having to change your energy orientation because of what your neighbour's been doing. Thank you very much. We'll get back to several of those examples, I'm sure. Simon, the EU view, please.
I think if I can just pick up, Martin, where you summarised Doina's very eloquent intervention, the reality is we're probably in the most complex and dangerous geopolitical moment since the end of the Second World War. Many of the assumptions we've made have been called into question. We've seen a permanent member of the UN Security Council attacking with impunity a fellow state. And I think we're seeing multilateralism and a lot of what we've believed in under threat. So I think the first thing that's really important to underline is, what is the EU trying to do? First and foremost, we're trying to reconfirm and reaffirm our steadfast commitment to multilateralism and a rules-based international order. It's not easy, but this is a moment where bodies like the UN, IFIs, need support, and our pluralistic liberal agenda needs defending. It starts with funding. While others are withdrawing, we are maintaining our course. If I look at recent overseas development assistance from the European Union, we're around about just under 100 billion euro per year. That's about 42% of global overseas development assistance. But the stark reality is that's not enough. And if you look at some of the transitions that many of our partner countries face, be it the digital transition, the climate change transition, that volume of funding in grants alone is not going to be able to do the trick. And this is why I think we need to work on the side of the European Union, perhaps much more intelligently than we've done in the past, using our grant funding to try and crowd in IFIs, member states, and above all, the private sector, and use leverage finance to respond to some of the challenges. And Martin, if I can, leverage finance, blended finance, that's very much in the DNA of the European Bank for Reconstruction and Development, and that's often been done as well, combined with a focus on governance and good governance, because the reality is, if we want to attract private sector investment, we also need confidence in the rule of law, the independence of the judiciary. That's a key factor. So I do think that the European Bank for Reconstruction and Development is likely to become an even more important partner of the European Union as we move forward in the next few years. The last point I would just like to make for many of those from the private sector who are here today is that I think enlargement is back on the political agenda of the European Union in a way that it has not been since the early 2000s. And this is hugely important. I mean, we heard from Doina the importance of the enlargement perspective as a catalyst and as a transformative power for the reform agenda in Moldova. But that is equally true also in parts of the Western Balkans, where we're seeing Albania, Montenegro accelerating towards enlargement, with that perspective also there for Ukraine. And that enlargement perspective will also be part, in my mind, of the future security guarantees that will exist for Ukraine. So I think my message to many in the audience today would be, enlargement is coming, it's coming fast, and now is the time to start investing.
Thank you very much, Simon. Can I just follow up quickly? Can you say a bit more about trade? Because we're all sort of hoping that as that defender of this global order, we will see the EU sign more trade deals, you know, as one big superpower withdraws perhaps from global trade, you double down. What can we expect in the month and year ahead?
I think the commissioner responsible for trade, Maros Šefčovič, he actually gave an interview, I think it was last week, to the Financial Times, and Maros was joking that he feels sometimes he's now under instruction from the president of the Commission to conclude a major trade deal each and every month. But to be frank, that's only a half
just a
joke, because we've concluded the negotiations with Mercosur. We're in the finishing line with Mexico. We're looking now to start negotiations with the United Arab Emirates as a precursor to a deal with the Gulf cooperation countries. We're accelerating negotiations with some of the key ASEAN partners. So I would say as well that the commitment to trade, the commitment to driving forward bilateral trade negotiations and agreements with regional blocs is there in a way that we haven't seen it with that importance in the last few years. So we're open and we're trying to drive this and accelerate this and see this as part of the right response to developments in other parts of the globe.
Thank you. So another wholehearted embrace, I think, of this order that seems under pressure. I'm sure we'll probe it a little bit more further in the discussion. But thanks very much for that. Mark, I was saying that the EBRD perhaps is in one of the most delicate positions. So let's hear the view from the House view from here, please.
Well, thank you very much, Martin, and a real pleasure to be here. I think you touched on it in your introduction. So the EBRD was created at a particular time in history, the early 1990s, with the mandate to help integrate former Soviet countries into the global economy, and a time when there was a belief that integration into the global economy, economic liberalism and democracy would all go hand in hand in a sort of linear fashion. And of course, the world has turned out to be a bit more complicated than that. And Simon described very well the geopolitical pressures that we currently face, the extraordinary times we currently live through. And of course, we've lived through various shocks in the last 10 years. I mean, going back to the aftermath of the financial crisis, COVID, the war in Ukraine, geopolitical tensions, now trade tensions. So a very different environment for the EBRD, but we are still an organisation that very strongly believes in the private sector. We have this mandate to help countries transition to market-based sustainable economies. And our belief in markets and integration and multilateralism are very deeply embedded and won't be shifted very easily. Of course, we've seen in recent years, we've seen that government intervention in the economy has come back into fashion. Public support for that may even have come back into fashion. And when I think about this, I always think that there are very good reasons for governments to intervene in economies, to tackle market failures, to prioritise important security concerns over economic concerns. A host of plausible reasons why governments should intervene, but a need for a very significant degree of caution. And it's a very long time since I was at university studying economics, but I remember your talk about the role of markets and competition and how markets efficiently allocate resources. Then your talk about market failure and the case for intervention, and then your talk about government failure and the need to be cautious about government intervention and the challenges of not getting it right. And I think that caution in terms of government intervention is very, very relevant in our countries. I mean, it's probably relevant in all countries, but in our countries with limited fiscal space, with poor levels of capacity, with governance concerns, I think there is a need for a great deal of caution, and government interventions need to be targeted. They need to have very clear objectives. They need to be time limited if possible. And I think everybody understands the risks in terms of regulatory capture or misallocation of resources. In terms of the role of the EBRD in these difficult times, I mean, I think my fellow panelists have actually answered the question, and I'm delighted to hear the kind of alignment we have in terms of the work we're doing in Moldova, the very important work we are doing in terms of dealing with the energy crisis, in terms of increased connectivity with the EU, the very important role that renewables plays in terms of making Moldova more secure in terms of energy. I would argue the critical role of the private sector in terms of the efficient delivery of renewable energy in Moldova. The work we are doing on SOE reform, I think a really important strength of the EBRD's business model is both our ability to combine investments with policy dialogue with technical assistance, but also our ability to work across both the private and public sectors, and to work with the public sector to work on SOE reform in order to kind of promote the conditions where the private sector can thrive. And I think I also, agree with Simon. The world may be much more challenged. Multilateralism may be under pressure, but the case for multilateralism still exists. The case for integration, the case for the private sector still exists. The work we are doing may be more difficult, but it is just as important. And I go back to our original mandate in terms of promoting the private sector and promoting sustainable market-based economies.
Thank you very much, Mark, and thanks for bringing in those dimensions of what you do in the countries and the sort of content of the policies, because it allows me to show some of the more illustrations I wanted to show. Because I said I wanted to probe you a bit. This is a chart of the rise in industrial policy. The EBRD regions are not so bad, but we've seen basically a change in how governments and institutions actually do think about the economy. The Washington consensus, I think we can all agree, has been left to some extent behind. The US and China are the standout countries here in terms of introducing industrial policy. This is sort of a domestic perspective, but if you show me the next chart, please, we can see how it also affects the international dimension. So this is the share of exports of countries or of regions affected by industrial policies. EBRD economies in the EU, other EBRD economies, still better than the usual suspects, but still, it's going up everywhere. So you've all embraced this open trading order based on multilateral liberal rules. At the same time, we do see in many countries governments doing things that 10 or 20 years ago would have not been advocated in polite company. So I'd like to understand a bit better on this domestic dimension of governance, the content of what we do. There's one more chart, because both Mark and Doina brought up state-owned enterprises. If we can see the next chart, this is something from EBRD research about attitudes. And this is to state intervention, support for state ownership. So the red bars are in the 90s, the blue bars are the late 2010s. And we see that the support for state ownership has gone up quite significantly, and more in the countries that have a more recent tradition of a command economy. So maybe we can go back to you first, Doina, because you made a point of SOE reform. And we see that, I mean, this is a general, this is not about your country specifically. Maybe it's different to your country, you can tell us. But how do you as a government deal with these changing attitudes in populations among your own citizens, also in other countries? So you have a sort of recipe for reform, and yet you can see other countries maybe not always following the same recipe. I mean, are you at risk of following a kind of rule book that gets a little bit left behind? Is there a risk there? Is there a risk of your own population not quite being on board with what you do?
I mean, there's always some population that are not on board with what we do. Speaking about a little bit of a protectionist policies, where we curate certain industries cleverly in smaller countries like Moldova, and I brought a little bit the example of the tech industry.
Yep.
So some of the other economic sectors in Moldova said, okay, why are you supporting the IT industry? Why are you not supporting the other economic sectors? Everybody wants a 7% single tax. And we get that question quite often. And then the state needs to respond, why is it supporting one industry over the other? And I think here, as long as there is a finite time, as you mentioned, and there is a clear objective of the state policy during a certain period of time, like for example, in the case of Moldova, there was to revitalize the tech and engineering capacity that has a spillover effect on other economic sectors, and we could quite well make a justification here, get the economy out of the shadow, get the young people to stay in country and get employed, because the young people, they want a different kind of jobs, they want a different kind of an economy. So as long as when we do that, I think that helps us to explain and get the industries on board. And then our other response is to the other economic sectors is that you need a different set of tools. Like what we did for the IT sector wouldn't work for the agricultural sector, right? For example, I mean, in the case of Moldova, for example, Moldova is still dependent on the agricultural economy. It used to be 22% of the GDP. Today is 9% of the GDP. And yet it's still vulnerable to weather, to the climate change. Like last year, on our GDP, because of the drought in agriculture, we lost 2% of the GDP. I mean, you imagine how vulnerable the Moldovan economy is. And now, with the EU growth plan, I mean, the question from the farmers is like, how is that going to help us? Like, is there something in it for us? Like, as a curated economic policy from the government to support the agricultural sector. And our response is, yes, the support for the agricultural sector is different. We will put in place a large-scale irrigation support program and maybe R&D for drought-resilient crops. So, I mean, from when we speak about the protectionist policies and a curated economic policy to develop certain economic sectors, I think for smaller countries, less is more, because we cannot be about everything. And in this case, the state sort of needs to be smart about it, which are the economic sectors that it chooses to support, because you need to have a very complex ecosystem and a supply chain and everything, so that these economic sectors are competitive and are contributing positively to the GDP growth.
I really like your term curated policy, because I think it suggests, you didn't put it in these words, but all these policies, to the extent they are interventionist, they're interventionist with a view to entering global markets, right? Certainly European markets. So I suppose one way of putting this is that we've all become a little bit less purist about the tools we choose for cross-border economic integration. But that's still where we're heading. And you succeed politically, you're in power, so you are managing to convince people.
And for Moldova, the EU single market is an existential. It's an existential issue. It's not an optional issue, because Moldova depends on the export to the EU market. I mean, we used to depend on the export to Russia. And now we've changed. We have 3% export to Russia, and we have 67% export to the EU. We are not yet there. We are peripheral, sort of part of, but for us, it's existential to be part of the single EU market, because 3 out of 4 Moldovan goods go now to the EU. So as you said, I mean, the government needs to be very thoughtful about it, how to support, where is your regional trade, where is your market, and in the case of Moldova, it's the EU, and then curate those industries and those enterprises that are capable and their capabilities and competitiveness, so that they can actually reach those markets in a very effective way.
Simon, isn't it fair to say that the European Commission's approach to economic policy is also more, shall we say, curated than in the past? I mean, we saw these industrial policy charts with Germany going very high up, and there's very clearly been a change in narrative about industrial policy. It's linked with the green agenda in Europe, but it's certainly not hands-off in the way it used to be. But how do you, in the EU, navigate this trade-off between a continued trying to be the global defender of openness, with much more interest in interventionist policies, certainly by many national governments?
I would say, first, I think you're quite right. I think our own economic policy and our own trade policy is going a quite radical change. We would classically have focused in the past, I would say, primarily on 2 pillars. First, the notion of promote, working hard on our competitiveness, investing in the single market, trying to invest in the research, development and innovation agenda. We would have always been very committed to the partnership agenda, both through the trade agreements, but also through our role in overseas development assistance. I think what is really new, and we've seen a leap forward at a quantum speed, is the development of a 3rd pillar, which I would describe more as the protect pillar, where there's a recognition that not all investments are neutral, and that we have partners who are seeking to use economic investments and tools as a weapon. We've seen this most evidently with the abuse of Russia, with the weaponization of hydrocarbons, but we've seen this in other areas. So where we have been doing a lot of work recently is in a toolbox which would classically exist at the level of a member state on economic security, and where the European Union is now beginning to play more of a role. So we're looking at, for example, working with member states to support them in the screening of foreign direct investment, seeing that sometimes behind an economic investment from some partners lies another agenda, be it to influence, be it to destabilize, or be it to gain competitive advantage by using unfair economic practices to achieve that. We've seen, for example, the European Union now beginning to look at advice to member states on the export of critical dual-use technologies. But we've also seen this in recognizing, for example, vulnerabilities when you are over-dependent on one actor in your supply chain. Critical raw materials, for example. If I look at some of what we've been doing recently with key partners like Kazakhstan, it's been about concluding critical raw materials agreement and driving that, if you like, from an administration and not just relying on the private sector to find alternatives. And if I can maybe just say one word on the green agenda, which is certainly under attack from parts of the globe at the moment. This is not an ideological doctrine. This is actually about, and it's not just about saving the planet, this is actually about economic intelligence. It's about using resources more rationally. It's about saving the resources in production, and it's about reducing vulnerabilities. And if I look on the European Union energy mix, the rise in renewables has played a huge role in the critical over-reliance on hydrocarbons from Russia.
Thanks very much. We'll get to questions from the audience in just a few minutes. I want a little bit more discussion here, but if I can remind the tech team that I will need an iPad once we start questions so I can see those who are sending in questions via Slido as well. Mark, I'm going to show a last illustration here, if I can have that. Thank you so much. Which is an EBRD chart that your colleagues showed me. And you may want to refer to this when you answer my question. I mean, I wanted to ask. We've just heard illustrations about this, still committed to the multilateral open order, but a more perhaps nuanced approach than in the past, both from individual countries, from the EU. Where does that leave you, the EBRD, as a development bank, in terms of the advice that you give? Have you had to sort of rethink, update? How do you adapt yourselves, or the EBRD, Mark, to the new world, basically?
Yeah, completely agree again with what the other panelists have said, and Simon set out very clearly the kind of the case for more intervention, the kind of very clear reasons why you need more government intervention. But without repeating what I said earlier, I think for me, you use the word curate, but it needs to be well curated, and there needs to be kind of clear objectives for policy. And I think we all know the risks around government intervention in terms of misallocation of resources, vested interests, not promoting a level playing field, and we see that in many of our countries of operation. We see state-owned enterprises which have an unfair advantage compared to the private sector. So, going to this chart, I mean, I think it's a fairly simple chart. It shows a basic kind of correlation between the quality of economic institutions and kind of governance levels relative to GDP per capita. The poorer, the less advanced the country, the less strong on the whole the institutions and the quality of governance. And I think it demonstrates the importance of the work that we do on governance. Now, the EBRD has always been involved in terms of governance, but we are defining it as one of our key priorities for our next 5-year periods. I think it's important just to kind of focus for a minute on how we operate. We are not a policy-based lender. We're different from the World Bank. We're a project-based organisation, but our ability to work in both the private sector and the public sector gives us traction with our clients to improve standards of governance. And we can work with state-owned enterprises, we can help them to improve their corporate governance, we can help them to introduce supervisory boards, we can help them be clearer in terms of the objectives they have. Sometimes that will also give us an opening to work on broader sectoral reforms or policy in a country towards state-owned enterprises, helping to ensure a level playing field between the state and the private sector. And as I say, this agenda has always been important for the EBRD, but we think it's increasingly important in today's age. It's increasingly important in a world where as we've discussed, government intervention has come back into fashion and has more support. So we are defining it as one of our strategic priorities for the coming period.
I mean, can you say a little bit more about what concretely it means to have it as a strategic priority? Do you see yourself as a bit of a counterweight to some political pressures that might pull the other way? It's not conditionality we're talking about, or is it?
It's not conditionality, but because if we work on a project, if we work with a country in terms of governance reforms, we need a willing client. We need a client that's kind of prepared to make changes. And obviously, as we heard earlier in Moldova, we are very aligned in terms of what we're trying to achieve in terms of SOE reform. Is it a counterweight? I think as I said at the beginning, I think the EBRD very strongly believes in markets, in the role of the private sector. I think that is part of our DNA. That's not going to shift, and we will continue to make that case, even in a world where we acknowledge there is more of that there are good rationales for government intervention. So in that sense, it is a bit of a counterweight.
Donna, I saw you smiling. I'd like to hear what this looks like from a national government.
No, I mean, and you were right. We need to be, swimming in the same direction. As you said, the client or the beneficiary, which is the government. And in the case of Moldova, it is the happy case. When Moldova and EBRD were going in the same direction. At the same time, when we're thinking about the capacity, I mean, there is political will that's aligned. There is a vision that's aligned. We're aligned in terms of the strategy, and where there are potential mismatch in terms of the implementation capacity is the delivery capacity. And this is where, when we're speaking about, especially large infrastructure projects for small countries like Moldova, I mean, they've been stalling, and we need to be open about that. They're not moving at the pace that they should be. And the citizens and the businesses, they're all waiting for this result. So I think where we need to double down, on the implementation capacity and to recognize where there is lack of, and to sort of step in. I like the term, co-create, co-design, co-implement. We're in the same boat, so there shouldn't be, a firm line. Here is the government, you guys need to do it, and here is us. We're in the same boat. And with EBRD, we do have that synergy, but it's even more important moving forward. As, for example, for Moldova, we have the 1.9 billion. It's a huge amount of funding for a small country. So we even have more roads to build, more hospitals to renovate, and more schools to renovate. So that again comes back to strong governance and very strong capacity.
Yes, I wanted to ask, when you said that there are delays and you have to be open about that, what is the reason? Is it governance that's the reason why things don't get done as fast as possible? Is that? I have private sector experience, and I know the private sector moves like a gazelle, very, very fast. And we want the government to move to act like a private sector, like a private entity. And it doesn't happen. I mean, the government is very bureaucratic, and when you're speaking about an infrastructure project, your client is the government. And this is where there is the challenge. And we don't have, as a frontier economy, we don't have necessarily the tools in place and the project management capacities or the right, sets of teams and people. And then the question is how can we accelerate that implementation? What is a smart way to build capacity within the government to build those teams? And I'll give you an example, of the EU accession. We're preparing now negotiations positions within months, what other countries have been done within years. So I need to be very creative about it. I need a shadow team. I need experts team. I need all the help I can get. And luckily, we are a good partner. We're a willing government. We want
to succeed as a country. So this is when everything is aligned. But again, just to recognize when there is that lack of capacity and to kind of strengthen it, because that will be the key to unlock and execute the projects at the speed that is necessary today, especially with everything with geopolitics and the economy moving so fast and shifting so fast.
I almost heard echoes of Elon Musk there, but I don't see you with a chainsaw, so there are clearly different ways of going about this sort of challenge. I'd like to open to questions now. We have some roving mics. Are there people in the audience who already have questions? That the lights are a bit... Okay, there's somebody on the front row here. Anybody else? But can we have a mic down to the front row, please? Sorry, the light isn't ideal, so if you're in the back, please raise your hand very high. And please introduce yourself. Thank you.
Hello, thank you very much. My name is Pedro, and I work for hotel and tourism development, planning, assessment, investment, whatever. 19 years ago, I was here in London, attending the EBRD meeting, the annual meeting held here some 20 years ago. And I recall that at that time, the EBRD was very energetic, meaning that probably there were a lot of challenges to be accomplished in many countries, but reality is that everything was about performing, investing, transforming. And now I see a lot of regulation, geopolitics, different frameworks. What comes first, the sense of urgency or the regulation? What is the strategy midterm? Thank you very much.
Thank you very much. Let's see if there's anybody else in the room right away, just to take one more. I don't see anything. Mark, I think that's for you first of all, no?
Can you? Did you? The question is on.
I think the question is asking where the urgency is. Is that a fair?
Regulation and geopolitics, or in the sense of urgency for transformation?
Sorry, what did you say it again?
Yeah, what I said is where the urgency is or where is the priority. Is it on the regulatory framework, the geopolitics, or is it on the sense of urgency of keep on transforming some of the handicaps that Eastern European countries and Central Asia still have?
Yeah, I mean it's a very, very broad question and kind of difficult to answer in that sense. But the EBRD, we are a transition bank and we're committed to the transformation of our economies. I think when you talk about regulation, obviously there are challenges both in terms of deregulation and creating the right environment for the private sector to thrive. And the Deputy Prime Minister talked about the private sector and the ability of the private sector to act quickly and ensuring that the state isn't a restraint on the private sector. There is also the challenge of creating regulatory certainty and for the EBRD, and again I go back to our business model, but our ability to combine investments with policy dialogue. A key objective for us is helping to create the conditions where the private sector can invest, and that requires, it's true everywhere, but it's certainly true in our countries of operation, it requires a stable regulatory environment that provides certainty. If let's go back to some of the examples we've talked about before, but the imperative of supporting Moldova in terms of diversifying its sources of energy and the critical role in terms of renewables. So, the dual challenge is to connect Moldova with Europe in terms of energy supply, but also to develop a domestic renewables market. That requires a stable regulatory regime where the private sector can come in and invest. And Moldova's made good progress in recent years with its climate laws.
Simon, you want to come in?
I just wanted to echo a bit the point that Mark's just made. I wouldn't necessarily buy the assumption that I think in part frames your question, that a good regulatory framework is at the price of incentivising investment. Quite on the contrary. And I think in particular in environments where we're trying to perhaps do lending, which is private sector based, which is not relying on a sovereign guarantee from a state, a good regulatory framework is a key part of having confidence that the environment is right. But I do think there is some work to do. I think we're heading this year to the conference in Sevilla on financing for development. And I think in particular for some of the very big investments which are drawing funds from a multitude of IFIs, we have to work to see can we increase the mutual dependence so that companies and countries are not having, for example, to do an environmental impact assessment for the World Bank, a different one for the EIB, a different one from the EBRD, but creating something that is simplified and that we're reducing the administrative burden, because often it's not necessarily the regulatory environment that is causing pain and grief, but it's some of the superfluous reporting requirements and administrative burdens that underpin the regulation. And there I think we have also got quite a bit of work to do at the European Union level, not about changing our regulatory objectives, it's not about a deregulation agenda, but it's about doing things more efficiently and freeing businesses from, at times, rather pointless administrative burden.
More people with private sector business.
And if I can echo, I mean, everything at the European Union level, it also applies to Moldova level, to a micro level, to a micro country level. It's the same. I mean, for the EU growth plan, we have two aspects. We have reform and we have investments. And we've been explaining that without reform, there are no smart investments, and investments, you know, they're mutually, they're coexist, they're necessary to, it's necessary to advance both and to have that stable regulatory environment that you spoke, like for the energy, for the alternative energy. And sometimes in our countries, we need to create a new regulatory environment for new areas that haven't been present in the country before. But that said, that doesn't exclude us from doing our job to cut the red tape and make it easier to do business, make it easier to report, make it easier to run the government. And that is a job that we will need to continue to do for the coming years. And this is where we have, you know, complaints from the businesses that it's still, you guys need to do your homework. As the governments, you need to continue cutting red tape for us so that it's easier and we can react faster to the market and we can implement faster all of our investments. And here, I mean, digitalization is one of the, I think, one of the responses that can unlock and can help us to be faster and leaner. Even with some excessive reporting requirements, digitalization can still be our best friend.
Another question in the front row, please. Do we have a mic? Down here, please.
Yeah.
Okay, two questions in the front row. We'll take both.
Thank you. Milica Delević, EBRD. Two very brief ones. The relationship between open markets and open societies, Mark referenced this in the beginning, and I think we are all aligned on the needs for the markets to remain open, but we are emphasizing this because obviously there are in some parts getting more closed than what we would like, what this means for open societies. And second, there is much more alignment around the governance agenda, which is cutting red tape and efficiency. But as one of the Martin's colleagues put it very nicely, there is such a thing as chain-sorted boomerangs. So how do we ensure that we actually, while we cut the red tape, on the other hand, we ensure that institutions are intact, that standards are upheld, and that agencies and actors that need to protect these markets continue functioning. Thank you. And thanks a lot for a very interesting discussion.
Thank you. We'll answer those questions and then get to you. And also I want to, because there's a question from Slido that relates to your first question. The EBRD's original role was to facilitate transition towards open markets, but we see support for a state-owned economy grow. Where did things fail? And what is the solution? It's a bit starker than how you put it, but I think in the same vein. And your second question, I think it's a word we haven't actually used yet. It's sort of about the rule of law and predictable governance, right? The predictability of governance. So, you know, it's a question for all of you, I think. So who wants to take a stab?
I don't mind having a crack at the first one on Milica's. I think if one looks at the links between open markets and open society, I think the two are intrinsically interlinked, because I think the ability to speak freely, the ability to challenge, the ability to promote diversity, have tolerance for different kinds of views, it's also a driver for innovation, and it's also an incredibly powerful magnet for attracting people to work and invest in that society. And I think we shouldn't undermine in any shape our commitment to the freedom of expression, the defence of the values on which many of the European Union, was founded and which underpin the UN Charter. On the whole question of getting the balance right, I think in certain areas, particularly when we're dealing with the transition countries, it's hugely important to invest in the capacity of the regulators, because I think the regulator is often the counterbalance to the kind of free market and can play a key role in striking that balance. We've seen this in sectors like water, we've seen this in key sectors like energy, and I think this is where we need to continue to put quite a lot of focus as a kind of enabler for private sector as a driver, but with the correction for some of the excesses that occasionally can otherwise creep in.
Doida, I mean, you were a government minister. I'm just curious, we haven't really talked about the politics of this. Are we missing the political dimension here?
We're not missing. Everything we're talking about is politics. And I mean, politics needs to work for the people. I get these questions often. I need to respond to my constituents all the time, the citizens and the businesses. But coming back, I mean, to what you said about the capacity of the institutions, and speaking about politics and the government, I mean, I'll tell you from a practical standpoint, from emerging frontier economies and emerging economies like Moldova. I mean, the reform of the regulators of the public institutions is key, because once for example, now we're transposing the acquis. This is thousands and thousands. It's like 000 of acts and regulations. And it's important for Moldova because we are joining a big market. We want to play with the same rules and have the same standards. But at the same time, it's huge. It's a huge burden for the Moldovan national authorities. And then there's a question of capacity. And it's chicken and egg situation. And I just came from my government session, and I was talking about the standardization agency and how their salaries are like $400 or euro per month, and they cannot fill in the positions. So that comes again with more and more reform. And the minute you think you got it, there's another big challenge that stands in the way of getting things right. And I don't want to sound pessimistic, it's just there's a lot of work to do.
Let's say it's always a work in progress. We can squeeze in one more question, I think. Here, again, front row.
Thanks very much. My name's Tom, and like Milica, I'm also from EBRD, and I promise this isn't a plant. So I work in corporate governance here at EBRD, and we come across a good quote that's often used, which is, "Bad board behaviour scuppers good governance every time." And given the title of this session, and given kind of where we are, do you think that the bad geopolitical behaviour that we're often seeing is going to scupper global good governance and the efforts that we're making? And what do you think that IFIs can do to counter that?
And can I just throw in a question that came in that I think is somewhat related, although maybe it's a bit more of a pointed example. What's the impact of the liquidation of US aid on Moldova and elsewhere? Obviously, it has broader implications than that. Mark, do you want to take the EBRD?
Yeah. There was an earlier question about whether the EBRD has failed, and my quick answer to that is no, we haven't. But we've still got work to do, and the job is not complete. On this last question about bad behaviour, no, I think that's right. I think in a world where there is the rules-based order is under threat, it's less easy to convince people to abide by the rules. I think we need to continue to make that case, and we will continue to do that. And when we work with an SOE, the supervisory arrangements, good governance, these things continue to be very important. But it's more difficult to do that in an environment where other people aren't playing by the rules. I think that's a broader challenge that we face. Martin, if I may make a separate point, I was very struck by your first chart on trade integration, which it shows quite a dramatic slowdown in trade integration, but it's stabilised at a relatively high level. And I think it's before we all get too too pessimistic about the kind of world order disintegrating. That chart does show that trade continues to be very, very important. And I'd make the broader point that even despite the tensions and challenges in today's world, the opportunities for regional integration are enormous. We've talked a lot about European integration, but if you look at another one of our regions, Central Asia, for example, there are massive opportunities in terms of regional integration and cooperation on things like water and energy. So we shouldn't be too pessimistic that the whole world order is falling apart.
Very quickly, the two of you, if you want to address any of these questions?
The USAID piece.
Well, I wanted to ask you, Dora, because when we talk about bad geopolitical behavior, I think we think more about your big neighbor than USAID, for example. But why don't you take either of those questions as you wish?
I mean, I have worked for USAID programs for the past 15 years, so I can speak firsthand. You know, the impact on Moldova has been tremendous. On the democratic path, support of the press, freedom of press, support of the democratic institutions, you know, plurality of voice, agriculture, tourism, SME development, tech industry, I mean, you name it. There's been huge support to make the lives of Moldovans better and to help our country progress. And of course, it hit the country. It left a big vacuum in the country, but luckily we have friends, and I see here on the stage like our friends from Sweden, for example. I mean, they stepped in and picked up some of the programs, for example, the Innovate Moldova programs that develops the robotics program in Moldovan schools and helps Moldovan young people to pursue STEM careers, or we have innovation centers at the universities like GLIA, female entrepreneurship innovation centers. So I'm very happy to see that Moldova, even in bad times like this, has very strong friends, and we're building new friendships and new relationships, and we're seeing, for example, EBRD stepping in on funding some of the energy programs, some of the energy projects. So I think, I mean, the mark is there, but Moldova is emerging stronger. It's our country. We need to step up and move forward and find internal development solutions and partner with friends like the EU, EBRD, and
it's a good place. It's a good place to end it because we're out of time. So I just want to say I listened to the session in this hall earlier this morning and remember thinking, that all sounds pretty optimistic. And I find myself thinking the same thing here, that there's a lot of signs that for all the pressures and challenges, the global multilateral order has a lot of life in it yet. So I think we end on that. Please join me in thanking the panelists. Thank you very much for a great discussion. And enjoy the rest of your meeting.